If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.
Hello from Trend Signal for our review of the data and events of the week beginning the 31st of October, the last business day of the month, start of a new month on Tuesday. Already November, time flies. Happy winter time, yes, we're already in winter. The difference between us and the US is 4 hours for 1 week. They do their daylight savings next Sunday. We have particularly unseasonable weather, despite it being winter time, a little bit like the markets seem to be very unseasonable. The focus is very much back on the politics of things, with the US election now just 8 days away now. Next Tuesday, Tuesday the 8th, is the election day, with the results known on Wednesday the 9th. Here's a snapshot of some of the headlines from the FT. This all to do with the FBI, referred to in some circles as FBI gate, email gate, whatever it is. It looks particularly dodgy if you're a Democrat. The media seem to be reacting now to the idea that the FBI could well have broken the law that prevents officials from influencing the election process. So Mr. James Comey coming under a lot of pressure from the senior Democrat, Harry Reid, who has implied that the FBI have got some explosive evidence about Trump's relationship with Vladimir Putin and Russia in general, which are an avowed adversary of the US, really. So, yes, all getting very interesting. It's an election like no other election, really. Markets, however, certainly stock markets, despite the volatility that occurred on Friday night when that news broke, markets have got a lot of intraday volatility, but they're not really going anywhere. Last week, FTSE down 24, Dow up 15, S&P down 14, DAX down 15. Nikkei's doing better with a weaker yen, up 260 odd points last week. But I guess the biggest move, dollar was fairly flat as well, shaving a little bit of its recent gains last week, losing against the euro, although gaining against the pound. But generally, the biggest news actually last week was more on bond markets and commodities. The likes of gold up $8, but oil slumping. I think bull market is wearing a bit thin. I think a lot of the bulls around are fretting over the upcoming OPEC meeting at the end of November, where OPEC have to do some fairly tough negotiating to decide which members share the brunt of the production cuts that they mooted back in Algeria a month ago. So quite a lot going on. A lot of data out this week, so we'll get to the data. Here's the Forex calendar list of data this week, and I'd like to split it into 3 groups, really, to make it easier to digest, because it's an unusual amount of data coming out. The first week is always busy with the employment data, but we've got the PMIs out, services and manufacturing PMIs, and also all this employment data as well, and central bank meetings. So it's a busy old week. Monday, there's little to nothing out. But we start with Tuesday with the manufacturing PMIs. In fact, I'm going to look at all of those for the week. We have the Chinese manufacturing PMI data out will come out overnight. When we get in on Tuesday morning, you'll be aware of what that is. We have the UK manufacturing PMI out at 9:30. We then have the equivalent in the US, the Institute of Supply Management Manufacturing PMI, bit of a mouthful. All this data, while it's important, we don't believe it's going to influence the Fed too much unless it really falls off the edge of a cliff. Data generally last week beat consensus in probably 3/4 of all releases, so that's something we can assess towards the end of the week. Other PMIs out, we've got the services sector out on Thursday. Thursday also another busy day, but we'll get onto the other bits of data coming out in a second. We've got the services PMI out in the UK, and again, the UK data has been surprisingly positive. Our GDP number, plus 0.5% last week, significantly beating consensus of plus 0.3% and well ahead of the Eurozone, bearing in mind that predictions were for a recession, if not for plus 0.1% at one stage. That was the forecast from the Bank of England. So plus 0.5%, the UK obviously benefiting from weaker sterling, although that has inflationary implications as well on the bond markets, which are in quite a slump at the moment as well. So that's the PMI's data. We have monetary policy meetings this week. We've got 4 of them. The Reserve Bank of Australia meeting overnight, Monday night, Tuesday morning. We've got the Bank of Japan meeting on Tuesday as well. We then jump to Wednesday, where we have the Federal Reserve. Remember, we are now different with the US, which basically means that release comes out at 6 o'clock, not 7 o'clock on Wednesday. We're not expecting anything. It's far too close to an election, as we've said in previous workshops, that the Federal Reserve will make no changes. This is so close to election, and we're expecting a probable rate hike in December, the following meeting in December. And then finally, we have our own Monetary Policy Committee, which is the rate-setting committee from the Bank of England, meeting and concluding its meeting at midday on Thursday. The usual data that's released, including the policy statement, the inflation report, and also the minutes of the meeting. We're expecting no change. In fact, it seems that the UK policy meeting, the Bank of England policy meeting, has been overshadowed by, will Mark Carney serve a full term? Will he leave beforehand? He was scheduled to leave after 5 years in 2018, but the rumour has it now, and I think we have it on this one here. Carney's future at BOE overshadows UK interest rate decision. Well, that's not that clear, but okay, pressure grows on Carney, but there are reports saying that he's accepted. Maybe it's on this one here. Bank of England governor ready to serve full term. Okay, so that's the one I wanted to pick up on, the idea that Mark Carney actually has agreed in principle to serve 8-year terms, so that would take him actually up to 2021. Continuity is good, and I think it would be a positive sign at the Bank of England and for the general wider economy, really. And he hasn't done that bad a job, despite some hiccups on guidance, which tends to flip-flop, as probably the global macro environment flip-flops, really. Okay, finally, for the rest of the data this week, let's focus on employment data. It is non-farm employment week, being the first week of the new month this week. We kick it off with the initial data from the ADP agency, the non-farm employment change. That's released at 12:15. Again, it's an hour earlier because it's just a 4-hour difference between us and the States. Slightly firmer number from the previous week. If we jump to non-farm payroll, you'll see that that's exactly the same setup that we're expecting from the Bureau of Labour Statistics, expecting 175,000 new jobs last month. Employment rate ticking down from plus 0.5% to 4.9%. Again, this data, unless it's wildly different from consensus, I think it's highly likely that we will get a probable rate rise in December of 0.25%. But it is one of the Fed's mandate employment, and so the employment data does matter, and it will be noted if it's significantly weaker than what was expected. But we don't expect significantly weaker data. That's just, and there are always revisions to it if there is. That's it. Thank you very much for listening. All the best. Bye for now.